Welcome back. Well, for the equity markets, it's a very green-looking screen. Let's find out what's happening in the world of commodities. Manisha is back. Now, Manisha was telling us a lot is moving higher in the equity world as well. What's catching your fancy today, Manisha?
Well, nothing else than gold should be, because we've seen very strong gains continue today as well. We are with 27% gains in this year, trading at record highs. So 49,200 on your screens is a new all-time high that the gold prices are trading at. You know, I've been talking to a lot of international guests, and they tell me that the Indian wives are the smartest with the kind of gold holdings that you have in households. The ETFs and the gold bonds have just about started now in this year, seeing a lot of interest and attention from the men or the portfolio holders. But with the kind of retail buying that India has and has been sitting on, if you bought gold in the last year, you have made 48% of gains there. If you even bought sovereign gold bonds 5 years ago when the first tranche was launched, you're sitting on a hefty profit of 68% even then. So there have been good gains there. It's only in the US dollar terms that we are trading at a 9-year highs. But with the rupee in this year, we've seen gold make all-time highs in other currencies like the euro, also the Australian dollar, and other 49 currencies as well. So the going has been quite good, and even at the kind of levels that we are sitting at right now, the expectation is that we are going to look at much higher highs. We have reports from Goldman Sachs, Bank of America, Citi, who have been putting gold in next 12 months to around $2,000 per ounce. There have been statements of $3,000 per ounce in the next year as well. Two major reasons for that. One is clearly the money printing, the amount of it, and done in such a short time. That clearly has been supportive. And the other is the markets are looking at uncertainty. It also is the year of US presidential elections. So all of that really adding up, and gold clearly glittering there.
Okay. All right, Manisha, you sound very happy. But I was just looking at the 2013 24 carat 10 grams gold price. It was 29,600. Well, we have not doubled. Nifty was 5,000 at that time, 5,100. Same, August of 2013. We are at 10,000 plus. Okay, I mean, we'll discuss that some other time. Thank you very much for joining us. We'll keep that battle going. But for the moment, we have two experts joining us, Manisha. We have got Jonathan Barratt, the CIO of Probis Securities, and Kishore Narne, Associate Director, Head Commodities and Currencies at Motilal Oswal Commodities. Gentlemen, thank you very much indeed for joining us. Let me start with you, Jonathan. There are people giving us numbers like 2,000 on gold, but that looks like now just a very short stretch. What's your sense of this rise in prices from 1,417 in March to 1,800 now? Where do we finish the year?
Look, I think it's all quite positive. I mean, I think every gold bug that I know has got a very big smile on his face, and I'm one of those as well. It's just good to see the price. People finally reflect the value in gold that we're seeing. And when I look at the price, I think it continues to trade higher, given the current set of metrics that we do have. I think 2,000 is something we're looking at. I am, first of all, focused on 1910 as the next levels, because it's still got quite a bit way to go. But I think even where we are, we can look forward to prices higher. I mean, 1815 needs to go, and I think that'll go in the next couple of trading sessions. And then after that, I do think. So I think there's more in it. I think there are more in some of the other metals, but at the moment, I think gold's certainly looking good.
Okay. The same question to you, Kishore. I remember that you were one of the first persons who, in 2013, was speaking about 1,900 on gold. You called that peak right. Where do you see it in 2020 itself?
Morning, Lata. I think, as you were discussing with Manisha, I think that's not so far. Right now, we are looking at three things which will continue to fuel this rally in gold. Number one, of course, is the global growth concerns and the liquidity infusions by the central bank across the world. So the amount of liquidity is, of course, that it's unprecedented. Number one. Number two, the lower interest rates or negative interest rates in many areas are going to be continuing at least for next 18-24 months. And the third is the big slippage of fiscal deficits across emerging markets could push some of the emerging market currencies weaker. So that makes gold interesting in emerging market currency terms also. So I think these 3 or 4 factors are going to be there at least for a year or so or more, if not. So we are projecting right now. Our call was our targets earlier were 42,000, which was achieved in December, and we revised that to $2,450 per ounce by the end of 21. And in India, we are looking at 65,000 to 68,000 per 10 grams before December 21. Again, depending on where the rupee dollar is going to be. So we are pricing in a rupee dollar equation of around 76 rupees per dollar by the end of 21. So even if keep that levels similar, so probably around 65 to 68,000 is something which we are looking in the next 18 months.
Wow, 65 to 68,000 rupees for 10 grams of gold. Kishore, those are quite some numbers. You know, I also want your sense on the actual physical demand in India. I mean, India is obviously a big player in the international market. So I'm just wondering how this is playing out. I mean, typically when prices move to all-time highs, does it impact demand? And also we're in the middle of the crisis where weddings are down to just 50 people and no more. So I'm wondering how that's playing out on the actual physical outlook.
Yeah, it does impact demand. Whenever the prices reach new highs, typically people tend to pull back. And currently we are actually going through a very different situation. Rather than a price rise, we are just going through a lockdown where the jewelry shops were shut for 3 months. So there was absolutely no physical demand. So you can write it off on the jewelry front. But there is a humongous amount of the coin and bar demand, that's the investment demand. You see the ETF flows, you see sovereign gold bonds have been much better flows. Globally, in the last 6 months, 760 tons of gold has been added to gold ETFs across the world. So it's phenomenal number. It's almost, we produce around 3,200, 3,300 tons a year. And in 6 months, ETFs added around 760 tons. It's more than central bank buying of gold, which happened in 2019. So there's a phenomenal investor interest rather than, so the jewelry demand is going to be subdued and it is going to be bad. I understand that probably in India, if you're talking to jewelers, they might be putting a number of 50 to 60% decline in investment, the jewelry demand. But invest demand will be subsidizing or supplementing that, and so that demand will be there. So, and mind you that gold never is a fundamentally, it doesn't act like a commodity. It doesn't work on supply-demand situation. It acts like a currency. So it's more interest rates, liquidity, how the currencies are moving, how the macroeconomy is performing. That's what actually drives gold rather than the demand supply.
No, of course, it will be more linked to currency printing and faith in fiat currency, which at the moment is ebbing with so much of dollar printing or currency printing. That's the question to you, Jonathan. This 1910 as a resistance or as a near-term target is for what period? Is it for the month, quarter? And for the slightly longer term, do you think that gets broken, say, for a 12-month period?
I think that's an interesting question. I mean, when we look at clearly where the macros are, and your other guests have sort of outlined them quite nicely. Look, I think we've got to really look at coming into the quarter or the next quarter. There are concerns where we're coming into some of those reporting periods as well. So that's going to give us some impetus to say, well, how much concern do we have over global growth and economy and whether or not that money will continue to print. So I think that's going to continue. When I look at it, am I looking at the next quarter? I think, if you think that it's taken us a fair way to get to this level, then I think it's probably about the same. So I think it'll ebb and flow, but I think towards next couple of trading sessions will certainly allow us to clear the resistance which we've just done. It'll spend some time consolidating and have another look to the top side. So, yeah, I think 1910, I think would be comfortable to say end of the quarter, maybe middle of next quarter.
You are looking at 2000 even within 12 months?
Look, I think it's possible, but once again, it's very hard to predict these things. When there's a change, and one of those could be a vaccine for COVID. How is that going to impinge on the market?
Fair point.
Will that correct? Okay. So I always think forecasting is one of those things where you look at it, you've got the best endeavours to see where the price will go. Given the current macro set, 2000 looks great, and even possibly higher. But then you've got to be a realist about these things and say, well, look, okay, what happens if this and this occurs? So you've got to be naturally cautious about it, but everything else points for it to go higher. I look at gold, I like it. Do I like silver a little bit better? Yes, I like silver a little bit better.
Okay.
I look at the gold-silver ratio, it's weighted to silver.
Okay. Thank you very much, gentlemen. I accept that just as the infection or the pandemic was a black swan, the vaccine also could be a black swan, and it might throw calculations awry. Thank you very much, Kishore and Jonathan, for joining us. We have to take a quick break, but we are going to now concentrate on the earnings season ahead. In our quarterly offering, Quarter Se Quarter Tak, we are going to discuss the FMCG stocks and what kind of results they may post. Mangala Malu will be here with us to tell us what the street is expecting, and Abneesh Roy of Edelweiss Securities as well to give us his take.